Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Terima kasih kerana menghadiri sidang akhbar pagi ini mengenai prestasi ekonomi pada suku keempat 2022. Saya juga akan menerangkan tentang perkembangan moneteri dan kewangan. Seperti biasa, bersama saya ialah Ketua Perangkawan Malaysia, Datuk Seri Dr. Muhammad Uzair Mahidin, dan Jabatan Perangkaan Negara ialah agensi rasmi yang mengumpul dan menerbit statistik KDNK negara. Please allow me to continue the presentation in English for the benefit of the international audience. In the fourth quarter of 2022, global growth continued to moderate amid higher interest rates and slower trade activity. In addition, China also experienced a severe COVID-19 resurgence, which affected its economic activity. Meanwhile, global inflation started to moderate amid softer commodity prices and easing supply chain disruptions. However, it remained significantly above average. Let me now hand over the presentation to Datuk Seri Dr. Uzair to announce Malaysia GDP performance in the fourth quarter of 2022.
Thank you, Kamila. Assalamualaikum warahmatullahi wabarakatuh dan selamat pagi. Jadi tujuan pembentangan kita pada hari ini adalah untuk membentangkan dan memaklumkan prestasi ekonomi negara kita bagi suku tahun keempat 2022 dan seterusnya angka bagi keseluruhan tahun 2022. Pada suku keempat 2022, ekonomi Malaysia mencatatkan pertumbuhan 7.0% disokong oleh pengembangan berterusan dalam permintaan domestik, pemulihan dalam pasaran buruh, permintaan produk E&E yang berdaya tahan dan pemulihan aktiviti pelancongan. Penyederhanaan daripada pertumbuhan tinggi pada suku ketiga 2022 berikutan langkah rangsangan ekonomi yang semakin berkurangan dan juga kesan asas yang rendah pada suku ketiga 2021. Bagi keseluruhan tahun 2022, ekonomi Malaysia berkembang pada kadar 8.7%. Pada terma pelarasan musim, suku tahun ke suku tahun, KDNK negara merosot 2.6% berbanding pertumbuhan 1.9% pada suku ketiga 2022. In the fourth quarter of 2022, the Malaysian economy recorded a growth of 7.0%, supported by continued expansion in domestic demand, sustained recovery in labour market, resilient demand for E&E products, and recovery in tourism activities. The moderation from the high growth in the third quarter of 2022 reflects waning support from stimulus measure and the low base effect from the negative growth in the third quarter of 2021. For 2022 as a whole, the Malaysian economy expanded by 8.7%. On a seasonal adjusted quarter-on-quarter basis, GDP declined by 2.6%. It was 1.9% in the third quarter of 2022. On the supply side, all sectors continue to expand. Growth in the services sector continue to be supported by both consumer and business-related services, following better labour market condition and the continued recovery in tourism activities. The manufacturing sector was driven mainly by the expansion in E&E cluster and supported by the primary and consumer clusters amid higher petrochemical output as well as fulfillment of motor vehicle backlogs. The agriculture sector continued to expand as oil palm production benefited from improved yield following higher rainfall earlier in 2022 and easing labor shortage. Growth in the mining sectors was supported by sustained production from crude oil and natural gas facilities. As for construction sector, growth was driven mainly by the continued progress of large infrastructure, non-commercial and industrial projects in civil engineering and non-residential subsector. On the demand side, growth was supported by private sector expenditure. Private consumption growth was underpinned by improving labor market conditions and policy measures. Spending was driven by consumption of necessity and discretionary items such as transport, housing, and utilities, as well as recreational services and culture. Growth in private investment was driven by capital spending in both structures and machinery and equipment (EME) by firm. The expansion in public investment reflects continued capital expenditure by public corporation. Public consumption growth remained supported mainly by government supply and services spending. Net export of goods and services recorded a strong growth, mainly on account of resilient demand for E&E export and higher travel receipt. Turning to the balance of payments, the current account recorded a higher surplus of RM25.7 billion or 5.5% of GDP. This was supported mainly by higher goods surplus driven by larger moderation in import relative to export. In addition, the services deficit narrowed due to higher travel receipt of RM27.9 billion following further recovery in tourism activities. Inbound travel, which consists of foreign visitor expenditure in Malaysia, has reached 33.9% of RM82.1 billion in pre-pandemic level. Besides that, higher receipt in construction and lower payment for transport also contributed to the smaller deficit in services. Moreover, primary income recorded a lower deficit of RM11.5 billion during the quarter amid higher income received by Malaysian investors abroad. Looking at financial account, FDI recorded a higher net inflow of RM19.3 billion during the quarter due to inflows in debt instrument and continued equity injection by foreign investors. These investments were channeled mainly into the manufacturing sector and non-financial services subsector, particularly in information and communication. Major FDI received are mainly from the United States of America, Switzerland, and Singapore. Overall, in 2022, Malaysia current account balance continued to record a surplus of RM47.2 billion as compared to RM58.7 billion a year ago. That's representing 2.6% to GDP. Meanwhile, total net FDI inflow amounted to RM73.3 billion, increased by 25.1 billion as compared to the last year. Before I hand over to Governor, I will also to recap on our overall growth of the year 2022 is the highest. 8.7% is highest for the last 22 years. It's mainly because the maybe also because of the base effect, and of course in our press statement also we also show some of comparison, the level of GDP for 2022 compared to GDP before the pandemic, 2019. So most of the sector, three main sectors still are negative. Only sector manufacturing and services on the positive territory compared to 2019. But if we look at the subsector of the services, still subsector that related to the tourism, like accommodation, food and beverages, and also industry that related to the construction activity in the business services also still in the negative territory compared to 2019. What I try to mention is beside the overall growth is strong, 8.7, but there are certain subsectors is still below the level of 2019. This also contributed mainly because our inbound travel in before the pandemic, we received about close to about 80 million received from the inbound travel, but in 2022 we only received about 27 billion. That the reason why the certain sector like accommodation, food and beverage still not come back to the pre-pandemic level. That's all. Hand over to the Governor. Thank you.
Right. Thank you, Datuk Uzi. So let's now turn to the outlook for 2023. Overall, the Malaysian economy is expected to grow at a more moderate pace after coming off a strong recovery in 2022. Global growth is projected to be lower in 2023 due mainly to tighter monetary policy and elevated inflation, but a global recession is not expected. Against this challenging global backdrop, domestic demand will remain the key driver of growth, supported by continued recovery in the labour market and implementation of investment projects. In addition, higher tourism activity will provide support to exports, partially offsetting the effects of slowing global growth. These factors will support the continued expansion of the economy. The updated official growth forecast for this year will be announced when Budget 2023 is retabled on 24th February. The labour market continued to strengthen in the fourth quarter and is expected to remain supportive of domestic demand. Employment improved steadily alongside a gradual decline in unemployment and underemployment rates, following continued expansion in economic activity. Going forward, indicators suggest that demand for workers remains relatively resilient and would support job creation and income growth for 2023. Job vacancies remain on an increasing trend since the third quarter of 2021, approaching pre-crisis levels. And with continued expansion in unemployment, wage growth is expected to be forthcoming. Going forward, the economy would benefit from the realization of new and existing projects. Recent investment intentions remain forthcoming, with approved investments totaling 194 billion ringgit between January to September 2022. By sector, approved investments were mainly in the real estate, information and communications, and electrical and electronic subsectors. The realization of these approved investments will provide support to growth. Investment is also lifted by continued progress in large infrastructure projects, particularly in communication and transport-related subsectors. On the external front, export of goods will be affected by the slowdown in global demand. Nevertheless, this will be partly cushioned by improvement in exports of services given further recovery in tourist arrivals amid the reopening of China's international borders. The balance of risk to growth remains tilted to the downside, driven by external factors. They include weaker than expected global growth, further escalation of geopolitical tensions, and re-emergence of significant supply chain disruptions. Despite the challenging environment, we do not discount the possibility of growth being higher than expected. Upside risks could stem from stronger pent-up demand in major economies and stronger recovery in the labour market and tourism sector. Let me now turn to inflation. The current environment of high inflation is a global phenomenon. That said, we have started to see some signs of moderation across countries, with inflation starting to moderate in several economies. The lower inflation in part reflected the easing cost environment, such as from global commodity prices. For Malaysia, headline inflation moderated to 3.9% during the quarter. As expected, the lower headline inflation was largely due to the lapse in the base effect of electricity inflation. The moderation was also amid the easing trend in key global commodity prices. Inflation for some key staple food items, such as fresh meat and eggs, also moderated during the quarter. However, core inflation increased further during the quarter to 4.2% amid continued strength in domestic demand. For 2022 as a whole, headline and core inflation averaged at elevated levels of 3.3% and 3% respectively. Now, I want to spend a bit of time dissecting core inflation. As you know, headline inflation is driven by a number of factors. It primarily reflects supply and demand factors and volatile price items. On the other hand, core inflation is a better proxy of underlying inflation that is affected by demand factors. So, with this in mind, I would like to stress 3 points. One, our inflation is driven mainly by supply factors. Nevertheless, the persistence of core inflation indicates that demand factors do contribute to underlying price pressures. Unlike past trends, core inflation is taking longer to moderate amid high costs and demand pressures. The increase in OPR is therefore undertaken to manage the demand pressures, which I'll elaborate in a minute. So over the course of 2022, as you can see from the chart, headline inflation and core inflation are expected to moderate, but remain at elevated levels amid lingering costs and demand pressures. Core inflation is expected to remain elevated in the near term, given continued strength in domestic demand, while demand pressures on prices are beginning to ease. We need to closely monitor all relevant indicators to ensure that excess demand does not push inflation higher. Existing price controls and fuel subsidies and remaining spare capacity in the economy will continue to partly contain the extent of upward pressure to inflation. Overall, the balance of risk to the inflation outlook is tilted to the upside. This outlook is subject to changes in domestic policy, for example, subsidy rationalization, global commodity price developments, and supply-related disruptions. So let me now explain our monetary policy. After a series of 4 OPR adjustments since May 2022, the MPC decided to keep the OPR unchanged at 2.75% at the recent meeting in January 2023. As I explained earlier, our current inflation is a combination of both supply and demand factors. While we know that the OPR has a limited influence in addressing cost push price pressures, It is an important tool to manage demand pressures. We have been seeing these demand pressures since the economy reopened, which contributed to the persistence and pervasiveness of domestic inflation. This has been the challenge of central banks around the world, with some facing pressing demand pressures more than others, hence the rather aggressive monetary policy tightening in these economies. High inflationary pressures are very damaging to the economy and cause even deeper hardship for the rakyat. It would hurt everyone purchasing power, especially for the lower income group, regardless whether you have a loan or not. The increase in the OPR is intended to moderate demand pressures on prices and thus inflation. But it is important to remember that monetary policy works with a lag, and it will take some time before we start to see demand pressure easing. We have moved in a measured and gradual pace, especially when compared to other countries. The decision to maintain the OPR for now allows us to assess the impact of our past OPR adjustments to the inflation and economy. This would give us better clarity on the inflation and economic outlook amid the evolving global economic environment and how we act next. At the current OPR level, our monetary policy remains accommodative and supportive of the economy. We acknowledge the delicate balance between inflation and growth risks, especially in the context of the challenging environment that we are currently facing. Going forward, we will continue to closely monitor the strength of domestic demand conditions and the risk to domestic inflation and sustainable growth. Further monetary policy normalization would be informed by the evolving conditions and their implications to domestic inflation and growth outlook. Turning to financing conditions, credit to the private non-financial sector grew by 4.7% as at the end of the fourth quarter. Outstanding business loan expanded by 3.3% as growth in loan repayments continued to remain strong, outpacing that of loan disbursements. That said, loan disbursements continued to record sustained growth, particularly for working capital loans, as firms continued to utilize existing lines to support their business activity. Investment-related loans also remain forthcoming, particularly for the purchase of non-residential properties in the wholesale and retail trade and manufacturing sectors. For households, outstanding loans expanded by 5.5%. Growth in loan repayments continued to be sustained, while loan disbursements grew at a relatively slower pace. The more moderate growth in loan disbursements reflected lower growth in loan applications, particularly for the purchase of houses. Financing by banks and DFIs continued to support the ongoing recovery of SMEs in the fourth quarter, with sustained growth in outstanding financing at 5%. Financing approvals and disbursements remain robust, sustaining above quarterly levels last year. Disbursements in particular was exceptionally strong throughout 2022, registering double-digit growth in all quarters, although moderating slightly to 12.1% in the fourth quarter. Repayments, too, remain intact at the aggregate level. In the fourth quarter of 2022, the domestic financial conditions eased following a slower pace of global monetary policy tightening, along with indications that inflation has peaked, especially in the US. Meanwhile, global investor risk sentiment improved, supported by the earlier than expected reopening of the Chinese economy. This is demonstrated by the 10-year MGS bond yields declining 34 basis points and the FBN KLCI gaining 7%. Since November 2022, the strength in the US dollar moderated as market participants adjusted their expectations towards smaller interest rate increases by the US Fed Reserve. Reflecting these global developments, the ringgit, along with most regional currencies, have appreciated against the US dollar. So far in 2023, the ringgit remained on this appreciation path with year-to-date adjustment of 2.4%. The performance of the ringgit against the currencies of our major trade partners has also remained broadly stable. Moving forward, the bank will continue to monitor developments and ensure orderly market conditions to support financial intermediation and economic activity. Turning now to the banking system. On this, I want to highlight that the banking system will continue to play an important role in supporting growth in 2023. Owing to their financial strength, backed by high levels of capital and liquidity buffers, banks remain well positioned to support the financing needs of the domestic economy. Banks also maintain sufficient provisions against potential credit losses, given some household, corporate, and SME borrowers remain vulnerable in the current environment of elevated costs and softer growth outlook. Improving labour market conditions and the continued availability of assistance for borrowers has supported household borrowers in facing higher borrowing costs. Based on a conservative simulation, household impairments are only expected to increase marginally from further increases in borrowing costs. Only 0.1 percentage point of the increase in impairments are expected to arise from simulated OPR increases. Instead, the uneven nature of economic recovery plays a stronger role in driving loan defaults. Going forward, the improving economic outlook and employment prospects will continue to be of greater significance in supporting household debt servicing capacity. Naturally, some borrowers will continue to face financial distress. Assistance remains available for such borrowers in the form of customized repayment programs from banks and AKPK to ensure these borrowers can sustainably service their loans over the longer term. Let me now conclude the briefing by reiterating a few key highlights. The Malaysian economy expanded by 7% in the fourth quarter last year, supported by continued expansion in private consumption and investment, improving labour market conditions, resilient demand for E&E goods, and recovery in tourism activities. Overall, for 2022, the economy recorded a strong growth of 8.7%. Meanwhile, headline and core inflation averaged 3.3% and 3% respectively for the year. Over the course of 2023, headline and core inflation are expected to moderate, but remain at elevated levels amid lingering cost and demand pressures. For 2023 growth, domestic demand will remain as a key driver of growth given the slowing global demand. I wish to stress that Malaysia will not go into a recession this year. However, highly challenging and uncertain global environment will remain the key risk to domestic growth going forward.